Hey students, welcome to week 4 of Accounting Principles. I hope and pray that your week is going well. The devotional this week touches on the importance of the gospel and answers the question, who is Jesus to you? The devotional is an audio of an old preacher with a new visual overlay on it. Don't dismiss this too quickly. I know it's kind of an old scratchy sounding audio, but the video is well done over the top of it, and I think you're really going to like the message. All right, let's talk about what's coming up this week. This week we're in chapter 3, and we're learning about net income, and we're explaining the concepts underlying income measurement. We're also going to learn about the differences between cash basis and accrual accounting, which means we have to also learn about the 4 situations that require adjusting entries when we're using accrual accounting. Finally, we're going to look at the ethical measurement of net income and the relationship of net income to cash flow. We're going to go a little bit deeper into some of these familiar terms now this week, like net income, but we're also going to be learning some new principles, things like principles that are important as we unpack accrual accounting. The terms like continuity, periodicity, and the matching rule will get some airtime this week, so be sure to learn these terms. This diagram describes the connection between the key terms in this chapter and the concepts that we're talking about. Notice the base assumptions of periodicity and continuity. Getting these 2 concepts down will help you understand the matching rule and net income, so be sure to learn them. When we use accrual accounting, we end up with 4 types of adjustments to the balance sheet and the income statement that need to be made at the end of the closing period, say at the end of the month. Be sure to learn when to use these adjustments by reading about them in chapter 3. Another complication that comes along with the use of accrual accounting is the potential for an ethics violation. And as a reminder now, ethics is a code of conduct that addresses whether actions are right or wrong. And I would encourage you to use a definition of a biblical definition of right and wrong over GAAP. And GAAP certainly is specific to finances, but ethics from a biblical perspective has to be first and foremost. And when we talk about cash flow, the inflows and outflows of cash into and out of a business are important to understand. Liquidity, having enough cash available to pay debts when they're all due, to take care of unexpected needs that might suck up some of your cash. Those are all things that we're looking at that are part of accrual accounting. All right. Because some of the adjustments necessary in accrual accounting are judgment decisions, there's an opportunity to over or under adjust numbers to make cash flow and liquidity look better than it might be, or to overstate it. We call this management of earnings. Now, management of earnings by itself is not unethical, but if companies take too much liberty with those adjustments, then it becomes unethical and deceptive. Be sure to read about this more in chapter 3. All right, that's it for now. Make sure you pay attention to these reminders, and as I remind you every week, make sure you remember that God is on his throne. He's always been there, and he's always going to be. Have yourself a great week.